On 251, record the following transactions in the general ledger account. So again, we're doing journal entries, right? Again, we're doing journal entries. We need to go through these one by one. Okay. Don't be afraid to say yes. That is just fine. That's what we're here for. I just want to make sure we're not doing something that isn't helpful. Okay, so number one in E6-3 says incurred salaries of $300,000, $280,000 of which was paid.
Yes.
Okay.
So you got salaries.
So you have expenditures, right? You have the amount that was paid, right? And then you have the accrual.
I didn't read it that way.
If I put it under salaries payable, would that be alright?
This?
Yeah.
Yeah, that's fine. The key word in this is payable. That's the key word. Okay? Salaries payable, accrued payroll payable, accrued salaries payable, however you want to say it. Payable is the key word, right? And I will say about account names, right? Your book uses a few different ways of naming accounts. Okay, when you're naming accounts in your workplace, you're probably going to be given the names of the accounts.
Right.
You don't have a decision to make. No. But if you are ever in the position where you're actually making a chart of accounts, you decide what those accounts are called, right? I mean, you get to decide what they say, other than, like I said, main key words, right? Like expenses in financial accounting, you want to say something expense, right? Or if it's a liability like this, it needs to be a payable. But other than that, you can call it whatever you want. Okay? Questions on number one? Do we understand how we got there? Even if you didn't get there directly, do we understand where that comes from? Okay? Number two. A long-term note, $400,000 face value, matured. The interest of $40,000 was paid, but the principal was not. So, I have expenditure, right, of $400,000. I have an expenditure of $40,000 for interest. So I have principal and interest, both recorded as expenditures. Why? Because the note matured, right? So it's due. Your chapter talks about expenditures when due, right? And if it's long-term, when due, okay? It's due. It just hasn't been paid yet. Okay, so they're recorded as an expenditure, the cash just hasn't gone out. Does that make sense? Okay, so the only cash that went out was for interest. The principal did not go out yet. It's a payable. Okay, it's a liability. Okay, questions on that one? Okay, number three, purchase computers with a cost of $45,000. $22,000 was paid. The balance is due and is expected to be paid at the end of the first quarter of the next fiscal year. So we have capital outlay, cash, vouchers payable. Good.
So on mine,
Yeah.
I put like materials expense. You want us to put expenditures?
Not necessarily. The key here, because and your book talks about this, whether you read this or not. It uses the expenditures and the revenue in front of stuff, especially in the first few chapters, to make sure you know what those are. But in reality, this would just be called capital outlay. Okay, it wouldn't be an expense.
So do we need that in our homework, or can we just put capital outlay?
You can put, if you put capital outlay, that's fine.
Okay.
The reason I've done this, and I've tried to be consistent about it, is to reinforce the same reason the book does it. Right? But that even falls off after a while. They don't always do it as we get later into the book. Okay? So if you don't need that or don't want it or don't want to type it in or whatever, that's fine. As long as you have the capital outlay piece is the important piece there. Number 4, purchase materials for cash, $19,000. Assume purchases method of accounting for inventory. So what does purchases method mean? Anybody remember that discussion? So purchases versus a consumption method. So purchases method means we're going to record it as an expenditure when it's purchased, not when it's used. Okay? And there's some leeway in GAAP for government nonprofit. Okay? Questions on that one? Straightforward enough? Okay, number 5. Received bill from the Water and Sewer Department for services, $7,500, $4,000 was paid, right? This is the same as an expense entry in financial accounting, except you're calling this expenditures, not expense, right? Same thing, common thing. Okay. Number 6. Ordered but have not yet received materials costing $70,000. So this is not a general ledger entry. This is a budget entry only. How do I know that?
It's an encumbrance.
Because it says what?
Not yet.
Ordered,
Not yet
but I've not
received.
yet received it,
Received
right? So I know that I'm planning on it coming. I'm going to set aside the encumbrance, which is the expectation of that expense, right? But that hasn't happened yet.
What is
Okay.
the difference between open encumbrance and encumbrance outstanding?
Same thing,
Okay.
different words. Same thing.
I wrote no entry because I was still confused by the encumbrance.
Yeah, there's no entry in. You're right that there's no entry in your ledger,
Okay.
right? It's just a budget entry.
Okay.
Okay. So you are going to make an entry, but not in the ledger.
Okay.
And that's what you were. I'm sure that's what you were
Yeah, I
thinking.
know. I was like, I
So-
know that that's not. It's just
Yeah.
there.
Okay? But we are looking for a budget entry there. Number 7, paid required annual contribution to pension plan, $250,000. Oops. Expenditures, pension contribution, or whatever you called it. And then cash. Right? Straightforward. Number 8, determined that the capital projects fund should be reimbursed $3,000 for wages that should have been charged to the general fund departments but were paid from the capital projects fund. Okay? It's a long way of saying that they made this basic entry.
For payroll.
Expenditures payroll, it could be expenditures salary, it could just be salaries. Yeah, whatever you want to put there. Right? Because we're in the government nonprofit realm, if you put salaries here, I know that you're talking about expenditures, right? Again, the only reason to put expenditures in front of whatever it is just to reinforce that.
What it is.
In-
Exactly.
Yeah, and until you're really comfortable with that, I would do it, but it's up to you. Okay? I'm not gonna. That doesn't. Because in reality, you're not gonna put expenditures payroll or expenditures salary or whatever. Okay. Number 9. Repaid a 6-month note, face value $50,000, interest on the note $2,500. Okay. Questions?
Pretty straightforward.
Note payable, retiring that. I have an expenditure for my interest. Cash goes out. Okay. And number 10, paid $75,000 to the golf course enterprise fund to cover its operating deficit for the year. I'm transferring it. It's not an expenditure, right? It's another source.
I just put operating deficit for my debit entry. I mean, you probably want to be a little bit more clear though, right?
Right, for the account?
Yeah.
Yeah. It needs to be a transfer. You need to say transfer to, you could say transfer to enterprise fund.
Okay.
But
That's as far as I.
But the golf course, I mean,
Is where it's going.
That's
if you are, right, like we looked at in one of the presentations, there are multiple, I think your guys,
Mhm.
there are multiple funds, right, that governments have.
Yeah.
So they could have more than one enterprise fund. So you can't just put transfer to enterprise fund. Well, which enterprise fund, right? Now, again, in the real world, you're going to have these account names, but you're also going to have numbers.
Numbers. Yeah.
So most likely you know by the number what fund that's going to, right? But for what we're doing here, you don't have numbers. So being as specific, as descriptive as you can is helpful.
Alright,
Okay? Questions on 6-3. So they're just journal entries.
I did a lot better on that because it's general stuff.
It is.
That was